Hello guys, you're welcome once again. In this particular video, we are going to be talking about using the SMI for day trading. How do you improve or enhance your day trading strategies using the SMI? So for day trading or intraday trading, you would want to focus on the 5 minutes, the 15 minutes, and the 30 minutes time frame. However, irrespective of the time frame you are using to do your analysis and to pick your trades, the principle behind using the SMI to day trade remains the same. Okay, it remains the same. But for the purpose of this video and in order not to elongate the video too much, we are going to just be focusing on the 30 minutes time frame. Okay, now as an intraday trader or a day trader that is making analysis on the 30 minutes time frame, one thing that you would want to look out for is identifying a curve on the SMI either around the upper boundary of this indicator window, the upper boundary for a sell trade, or the lower boundary for a buy trade. Now, once you see the SMI make a downward curve around the upper boundary of the indicator window, as a day trader, you can decide to enter just one trade right after the curve. And remember, in a previous video, I discussed that the SMI follows the trend. When there is bearish pressure, the SMI moves in the downward direction, and when there is a bullish pressure, the SMI moves in the upward direction. So, as a day trader who wants to open a trade perhaps at the start of the day and close it before the end of the day, or open a trade within the day and close it by the end of the day, you can just look out for one high probability opportunity. One high probability opportunity should do the trick. Now, had it been we are looking for a good opportunity this day, being the 25th, we are going to look at several examples. This is the 25th of September, and we are looking for a good trading opportunity. Now, we saw a downward curve around the upper boundary of this indicator window. We would have decided to enter a sell trade just right after the curve. We would have entered a sell trade right after the curve, and that would have been somewhere around here, right? Then remember that our exit signal is when we have an opposing curve, which is going to be here, an opposing curve, right? Now, having already entered a sell trade here, we would have exited somewhere around here if we were using only the SMI indicator to determine our entry and exit, right? Because you can also use support and resistance levels, you can also use other indicators for confirmations, right? Now, but if we are using only the SMI indicator, we would be looking out for an opposing curve, which will cause us to close our sell trade somewhere around here, okay? Now, after closing that sell trade, because the SMI is moving in the downward direction, then we know that there is bearish momentum. Because the SMI is moving in the downward direction, then we know that there is a bearish momentum. Now, considering the fact that the day is not yet over, in fact, this was still around 12:30, or okay, when we closed the trade would have been perhaps around 14:30, 15 o'clock. Now, as a day trader, you can also decide to enter another trade within that same day, which is going to be around evening time, because you can see that after the SMI indicator went up, it curved back downwards, showing that the bearish momentum was still prevailing. So a day trader could have entered another sell trade after the downward curve, because this is a bearish trend. There is bearish momentum. So right after the downward curve, within that same bearish trend, we would have entered another sell trade. And that would have been, remember, we had already exited the first sell, okay? We had already exited it, right? For that first sell, we would have set our stop loss above the swing low. We would have set our stop loss above the swing high, sorry. For the initial sell trade, we would have set our stop loss above the swing high. And then our exit signal would have been that opposing curve. Now, that is why it is very important to know when to exit your trade, because had it been we had not exited after this opposing curve, the price of Euro USD later went up and it would have hit our stop loss. So it is very important to know when to exit your trade, right? But considering the fact that we would have stuck with the signal given to us by the SMI, then we would have exited our sell trade around here, and then right after this downward curve, we would have entered another sell, right? We would have entered another sell, and then we would have set our stop loss above that immediate swing high, just above it, right? Now, our take profit level, remember, you can use support levels or you can use other indicators to confirm. But if we are sticking to the SMI, then we would want to wait for another opposing curve. And that is going to be an upward curve, right? And that would have occurred somewhere around here, right at the end of the day. Right at the end of the day, we would have closed our second sell trade. So throughout that day, we would have entered only two trades, which are two sells. And the first one would have yielded about 13 pips, while the second sell trade would have yielded somewhere around 63 or 61 pips. So let us look at another opportunity. Now, at the start of the next day, as a day trader, at the start of the next day, which is 26th, we would have, considering the fact that the SMI is already in the lower boundary of this indicator window, it's already in the lower boundary, right? So we would have been looking for a buy opportunity because the indicator is in the lower boundary and it is tending upwards. Considering the fact that it is tending upwards, it means that there is a bullish momentum. So we would have entered a buy trade at the start of the day. At the start of the day, or whenever you identify the signal. But if you identify the signal too late, it is better that you stay off. Because if you had identified the signal somewhere around here, it is already late because the indicator is already at the upper boundary. But had it been you had identified this signal on time and you entered around here, you would have exited right after the indicator gave an opposing signal. Now, entering the buy trade around here and exiting right after this downward curve would have given us somewhere around 21 pips. Now, because we are looking for only buy trades for those trading in the direction of the trend. Okay, as a day trader, this is a day trading strategy now. I am discussing how to use the SMI for day trading. So I will not recommend counter trend trading for day trading with the SMI. I would only recommend you trade in the direction of the trend. So since this is a bullish momentum, we are looking for only buy trades, right? So right after this downward curve, we would have sold our first buy trade. We would have closed our first buy position. And then right after the continuation, remember that this is a bullish momentum. There is bullish pressure. So we will be looking for another upward curve. And right after this second upward curve happened, we can see that the price of Euro USD responded accordingly. This was where the curve happened. So we will have entered a buy somewhere around here because this was where the curve happened, right? So entering around here, we will have exited right after the downward curve began to happen. Remember that it doesn't mean that the curve must be long before you exit. Once you start seeing the sign of that downward curve, make sure you exit your trade, okay? That is the sell signal. Once you have entered your buy trade already after the upward curve, that would have been somewhere around here, right? And then you had exited right after this downward curve began to form. That would have been somewhere around here, right? So we would have caught somewhere around 10 pips for this second buy trade. The second buy trade would have given us about 10 pips. Then right after a new upward curve began to form, considering the fact that this is still within a day, you could have considered entering another buy trade right after the upward curve had begun to form. And that would have been entering somewhere around here, okay? And then right at the center of a new downward curve, we would have exited again. So this would have been our third buy trade within that day. And this would have given us somewhere around 38 pips or 40 pips thereabout. So there would have been 3 good buy trades for us within this day. So this is another example of how to day trade using the SMI indicator. So we can also look at other examples. You can see that there was a sell momentum, so we would have considered a sell trade. We would have considered only sell trades for this day. The first trade would have been somewhere around here, and at the center of an upward curve, we would have sold somewhere around here. And then remember, we are only looking for sell opportunities. So at the center of another downward curve, we would have entered somewhere around here, and at the center of an upward curve, we would have exited. And now after another downward curve began to form, we would have entered another sell trade, and right at the center of an upward curve, we would have exited. Remember, we are only looking for sell trades because this day had a bearish momentum, right? Now at the center of a new downward curve, we would have entered another sell trade, and right after an upward curve began to form, we would have exited. So you can see that price was always responding to the movement of the SMI indicator. So basically, this is how to use the SMI indicator to day trade. This is a day trading strategy for the SMI indicator. I hope you enjoyed this video. If you did, kindly like, subscribe, and hit the notification bell so that you can be further updated on any new videos. Happy trading, guys.